Hello friends, welcome to Cafemutual webinar. Friends, as we all know that debt funds have been delivering less than inflation returns for the past 1 year. In fact, if experts have to be believed, this trend will continue in the current financial year as well. In such a scenario, it is important to think beyond debt funds. In this context, we bring to you Vinay Mathews, founder and COO of Faircent. Friends, Faircent is a peer-to-peer lending platform. So today, Vinay will talk about opportunities and challenges in P2P space. Friends, Vinay has over 20 years of experience and holds a master degree in business administration from Institute of Management Studies, Devi Ahilya Vishwavidyalaya, Indore. Welcome, Vinay.
Hi, Pramit. Thanks. Good afternoon, everybody.
Yeah.
Thanks for having me.
Great. So, Vinay, could you take us through the journey of Faircent? I mean, how it all started and what's the objective of Faircent?
So it all started, I think, 12 years back when me and Rajat started talking about a model by which we can bring in the demand side and the supply side on a platform and lend and borrow money. Okay, so the two-sided marketplace experience is what we had. So I used to run a business called Times Jobs. There was a demand side, supply side in that business as well. The demand side was, the candidates. The supply side was the jobs which were there on this job site, right? So our job was our endeavor was to kind of make sure that you match these two. So that's the background me and Rajat come from. So we manage business like Magic Breaks, Simply Marry, Times Jobs. So the same principle, we thought, can't it be applied on a financial services business, right? A lending business, and that's when we decided to kind of start. 2013 is when we started, and when we started looking around, we saw the two-sided marketplace business in the financial services business, especially in the lending side, started in 2005, long back, in UK. Okay, it all started in UK, moved to US. China, parts of Europe, whole of Latin America. Now the Asian countries have picked it up. So India, the regulation came around 2018. Since then, we've been pedaling very hard. We started a company in 2013. So we have a good vintage of 9 years of conducting this business. Our platform has matured a lot in these 9 years. We learned a lot. We corrected a lot. And we were told that in a financial services business like a lending, there is a cycle which comes every 7 years. But to our surprise, there were a lot more cycles that we saw. There was this demonetization which happened, GST, NBFC fiasco, then 3 waves of COVID. So we saw a lot, and all of that we took into our learnings. So we are completely a tech platform, and we conduct this online. We are very, very distributed as an organization. So that's how it all started. So there was a journey which was different when we started, and there is a journey that we are doing right now which is completely different than what we started with. So there's a lot of maturity which has come into decisioning, a lot of maturity which is come into predictability with respect to the default. All of that has kind of really matured a lot from whenever we started. So I think at the end of the day, it's a business of data, and the more data that you churn, more better you get as you go along, right? So we are in the business of data, and what we are trying to solve here is a genuine problem on both sides. As I said, we have two sides, demand side as well as supply side. On the demand side, what we're trying to solve is can we give credit to people who typically do not get credit from banks and NBFCs? There are only 5-7% population in this country which get unsecured credit. Credit card penetration is 2-3%. So the objective is that can we give it to a whole lot of people in this country who do not get access to credit. And on the supply side, we're trying to solve is can we give our investors, or our lenders, more money than what otherwise they are making from any other debt, asset class, right? So this is a beautiful asset class with respect to debt. backed by contracts, individual loans. It's brilliant, right? It's a retail loan, so it makes a lot of sense to participate on a platform like this.
So, Vinay, so we have been hearing about P2P lending for quite some time now, right? But how does P2P lending works? I mean, how does Faircent work, and how does P2P lending work actually?
Okay, so there are two sides. As I said, just like Uber has two sides, there is a demand side, supply side. Similarly, we have two sides. On one side, there are lenders, and the other side, there are borrowers, retail people, a large number of people. So in Uber, if you have a car, attach yourself with Uber, and you can make money out of it. If you have a house and you want to let out a part of your house, attach that with Airbnb, you can make money out of it. Similarly, you have extra money, you attach yourself with Faircent, you make money out of the money that you attach, right? So the model is of social commerce. And on the other side, we have borrowers coming onto our platform who are looking for loans cheaper than the alternative that they get otherwise, and faster. So they want it cheap and they want it really fast. So these are the promise that borrowers want, and we kind of make sure that borrowers get that. On the lending side, lenders are looking at something better than what they are currently getting from any of the debt mutual funds or FD or any of those asset classes. So we give up to 12% returns. That's the maximum that we give on programs which are locked in for a year. But it starts with 8.25 going up to 10%. So what is happening is that the license that we have got from RBI is to take money from public and lend it out to lend the money to public who need the money. But obviously there is a lot of due diligence, verification process, all of that which happens. It's not straightforward, so there's a lot of complexity at the background which runs in making this work, right? So there is a lot of integration, so there's a lot of tech play around it to kind of understand and mitigate the risk for our lenders.
So, Vinay, why do you think that P2P lending has an edge over other fixed income products like debt funds?
See, within the debt, I think the best debt that you could get is that your money going to individual loans, right? Typically, what happens is that the money which is floating around goes to corporates. It's not individual people that it goes to. It goes to large organizations. Now, what we've seen in the past is that organizations have failed, right? One of the reasons is could be environment, the other could be the governance. So there could be many reasons for which the organization fails, right? Or the model itself is not relevant now, right? So in the absence of not putting money in large number of organizations because they're large in number. So if the organization is large, you put a limited number of organizations that you pick up to kind of invest, right? So retail does not behave like that. So retail is like large numbers, and most of the retail, if you look at, is taken away by the banks. So banks are the ones who has eaten away all the retail loans, right? So as an individual, you don't get to actively participate on retail loans, and if you have to come onto a platform like Faircent to do it, because otherwise, if you look around, you will not see anybody originating retail loans, right? So either it's bank because they have a lending license, they can so similarly us, we have a lending license, so we can originate loans on our platform and you can kind of participate. That's one of the best asset classes, right? So it's distributed, it's fractionalized, it cuts across India with different segments. It is completely in millions of people that you invest in, so it becomes quite risk from a mitigant point of view. So the failure of an asset class like this is very limited. Practically, it's not there. Even if the economy goes, into a slump, the asset quality does not go all of a sudden kind of disappear, right? So which we see in stocks, in some of the mutual funds, we see that happen, right? But you don't kind of see that happening on a retail assets, right? Retail individual assets. That's the reason it's very superior than any other asset class.
So Vinay, yesterday I was in Kolkata and I met a distributor who manages close to 200 crores of assets in mutual fund. So, but he asked a pertinent question to me. सो मेरा धंधा तो मस्त चल रहा है, मैं क्यों P2P lending करूं? So what is your message to him?
See, a large number of money is lying in debt, a large, and FD itself has a huge amount of money. The last count of FD money is 2 lakh crores of money is lying in fixed deposits or CASA, right? So there's a lot of money floating around, earning nothing, right? And even in the debt mutual fund, if you look at especially short term, there is nothing that we make out of, right? So it's not even doing even close to what inflation is. So you're actually losing money if you're parking those money there, right? But if you need something which is slightly more better, you might get a Muthoot NCDs or Shriram NCDs. Now, the moment you kind of take those, you're betting on just one company. You remember this, right? Unlike so if Muthoot fails or any of those organization fails, your money is gone, right? So we've seen that in the past, organizations failing and a lot of people, debt funds not able to return, to the individuals, right? So we'll see this trend as we go along more because the environment is such, that it's so the best bet is individual people, and it is imperative right now in today's environment that you put a small portion of your money in these loans, right? In retail loans, right? You can't become a bank, right? You can't kind of participate on those end customers because if you look at the NPAs also, majority of the NPAs, sit with the corporates. It does not sit with retail individuals. If you look at retail individual book of all the banks and some of the large NBFCs who are doing it, they're all doing well. They're all under 3-4%, not more than that. Okay, because आम आदमी की फितरत खराब नहीं होती, उसको नौकरी करना होता है, उसको खुदा का खौफ रहता है, उसको लॉ का खौफ रहता है, and he kind of pays up his money, right? And if he does not, then there are laws and measures around it, right? So there's the legal case around it, there is section 138 around it, so the criminal offense, all of that is there. So nobody wants to risk their life or their career or their this thing with doing something like that, right? So आपको बाहर जाने को नहीं मिलेगा, आपको सरकारी नौकरी नहीं मिलेगी, आपको कुछ बहुत सारी चीजों में पार्टिसिपेशन करने को नहीं मिलेगा. So all of that happens, right? So with respect to that, it's very, very important to ensure that you are participating in an asset class, which kind of makes sense, right? So that's the reason I think P2P becomes a very essential class at this point in time going forward to invest in. And globally, this movement has happened. It's not just India. So globally, these organizations, globally, what has happened, in fact, is that the government also has started participating in these platforms. Not just individuals, government also has started. Institutions have started participating. Government has started participating. It's become kind of a big asset class globally. So India may be hoga. In fact, in UK and in Singapore and some parts of, I think, Australia also, there is a law which says that if you invest in P2P lending, you will get interest money that you make, you will get a tax rebate. Okay. Not only that, if you lose in money there, you can set that off with your income, right? So that law came. Okay. And the reason the law came was because the government wanted participation from public, and that's exactly the reason this has been regulated, right? The government want people to kind of participate in these platforms, and the reason is see, if you're not performing well, anyways, people are not going to be with you, right? They will just walk away. So you have to perform, right? As a platform, you have to perform. Only then people will stick with you. So जैसे हमारे पिछले 2 साल में in the last since the time we have launched the new model, there has not been a single lender who's lost his money. Not a single lender. Okay, all of them have got the returns what they were told, and not as 0.00% people kind of defaulted, we defaulted on the commitments, right? Kind of we gave out full money whatever was due to them, right? Now, if you do this and the confidence gets built up, the government wants people to participate because at the end of the day, if you look at the NPAs, it all sits with the government, right? It's the government which is paying this money off at the end of the day, right? RBI ko dena padta hai. So and the banks aren't lending to these individuals. They're not taking the risk beyond a certain or the they're not going deeper with respect to their retail loans because they're comfortable doing secured loans, right? So a large portion of the book is in secured loans, a home loan, car loan. They're very comfortable doing that, right? Because usme zyada mehnat nahi. There's no science around it. There's no model around it. So all of that is, fairly, you kind of take an asset worth 2 crore rupees and lend 1 crore rupees. It's kind of little easier than, obviously you have to kind of vet and validate the asset, but that's fairly simple and it's been there for some time, right? But the world we're heading towards is not like this. The world we're heading towards is that you'll get 1 crore rupees or 2 crores of rupees 10 years from now without any asset back. Okay, so that's the world we're heading towards. So data is going to become very rich. Data is going to kind of talk a lot about you, and this is that you will get a decision. Today itself, even today, we get to know, bureau gets a lot of information about you as an individual. We'll exactly get to know how many loans you've taken, what is the performance of those loans, have you defaulted, not defaulted. So there is many data points that you can pick up from bureau, through which you can make a decision with respect to whether you can give a loan or not.
Okay. Vinay, a lot of financial advisors and MFD do goal planning. So they usually help their clients identify financial goal and then recommend the products, right? But what kind of life solution does P2P lending can offer them?
What solution?
Life solutions. I mean, which financial goal investors can achieve through P2P lending products?
See, I think it's a short duration. This is an investment for shorter duration. It's not for a long-term duration, right? So the offering that we have is 12 months, 6 months, and 3 months. Okay. We also have liquidity product as well. So you want to put money, and whenever you want to take the money, you can take the money. And the loans itself is small loans. It's not like it's running into years and years, and the credit profile of the customer might change. So the maximum that we can give out to a customer is 3 years, right? And the average that we are sitting on right now is 1.25 years, right? So loan itself is very small. The ticket size are small. A large number of customers that we're trying to kind of give money to, and believe me, these individuals don't need a huge amount of money. They need a small amount of money, and their life is perfectly set with that small amount of money, right? Because we're not stepping aside and looking at India, right? So 85% of India needs very small amount of money. Under 1 lakh rupees, they need to kind of set their lives better, right? So can you find out those people and lend to them, right? That's the whole agenda. Now, you want to invest for short term, for 3 months, 6 months, 12 months. This is the platform to invest. We also have a product where you invest and you can kind of make, those are 36 months and 24 months product. You invest for 36 months and 24 months, you get principal. So principal stays with us. You get interest every month, and the end of the 24 month or 36 month, you get the principal back. So there are two variants of that, plus the 3 months, 6 months, and 12 months product, apart from the liquidity product. So these are the 6 products that we have where people. So the short term. So if you look at it from current allocation, I think the allocation with respect to the money that you're putting should be more, because that's what we hear from our partners. Allocation has gone up because the current debts instruments are not performing well. They are completely not making sense with the kind of inflation that we are living in right now. It's absolutely a no-brainer. And the stock or the equity is cyclical, right? So it's if you were there in the first wave and we picked up the stock, we would have made 100%. But now if you get in, it's like unlikely to kind of make 100% in the next 1 year, right? So that's a little cyclical, unless you pick and choose very strategic stocks that you think can kind of grow. But that does not, large number of people don't understand that, right? So this is a very basic, investment, very basic product comparable to a fixed deposit. So whatever you do in fixed deposit, you can park your money for 3 months, 6 months, 12 months, and you get a return out of it, right? So what we are promising is that we will give you double the return of what you otherwise get in the bank deposits.
So Vinay, you have highlighted the opportunities so far very well, but what are the key risks associated with P2P lending?
Okay, so let me just try and explain this through few slides that I have. Okay, so let me just open the slides. Get a better sense. Okay. Can you see the slide?
Yes.
Okay, why do investors participate? Because one, the platforms will ensure with the technology, can mitigate the risk. We also have credit experts who look into this profile of the customer pretty in detail. Plus, we get a lot of information with respect to the customer. There is fractionalization. I talked about distribution. We just not concentrated on one city or one district or one state. We are cut across 1,120 cities nationally, right? So we are RBI regulated, and there is this trusteeship that is enabled with this entire. So this is another thing that the investors should remember. So the money that you park with us is not technically with us, right? So the government has done a model by which it goes to an account. There's an ICICI account it goes to, and this account is controlled by a trustee. It is not controlled by us, right? So what it means that there has been many instances in the past where fly-by-night operators, come and just disappear, right? The money, and with the money they're gone, right? So this can't happen here. Okay, so the money moves only with the trustee's instruction. It does not move with our instruction. So the lender says that I want to invest here. We take the money to the trustee, and trustees, we tell that this lender wants to invest money into these borrowers. Then the trustee instructs the bank and the money moves, right? It's a very secure system, right? So even if we don't exist tomorrow, let's say we go out of business, the money is not going anywhere. It's controlled, nicely packed in one entity, right? So a lot of people do participate because there is the social impact story around it. And I talked about the retail credit part, right? So it's very, very no-brainer to kind of have invested in this asset class, because this is one of the best asset class, and that's the reason banks make lots and lots of money, right? Because they invest. Some of the banks which invested really well in the retail side, which is ICICI Bank, HDFC Bank, Axis Bank, SBI, they're making money every quarter. There's the reason for making the money every quarter is because they have spread out very nicely in the retail part of it. So you need to kind of do this, distribute your loans to millions of retail borrowers across thousands of cities, spread across various loan products, segments, industries, ranging between 12 to 36% rate of interest that we charge from the borrowers. So if you can do this, and we do this technologically, it's possible. You're basically fractionalizing and completely mitigating the concentration risk. Okay, and that's why this becomes beautiful. Okay, so let me take you through the risk. 1 second. Okay, so why do investors participate on the platform? Because ROI is fixed. There is no fee for the investor. It is performance based. So we make money only when we perform. Otherwise, we don't make money. So for us to survive, exist, we have to perform. Otherwise, we go out of business, right? So it's important for us to kind of make sure that we work harder. So 100% success rate on giving returns through the platform on the new avatar that we have launched. And we have APIs for this for any partner to kind of integrate. Absolutely no concentration risk, well calibrated with analytics, beautifully fractionalized across, as I said, more than 1,000 cities, right? So this is the offering which I talked about, 12, 11, and 10%, which is 3 months, 6 months, and 12 months, which I talked about. And these are two products which I talked about, 36 months and 24 months, which just gets the monthly interest on this. And last one is a freedom plan, which is the liquidity plan. You put the money and you can take out the money anytime you want. Right? Okay, so talking about the risk. So how do we mitigate? So important thing to kind of understand is how to mitigate, and people who are not doing it are the ones who are. So one, we digitally kind of process the entire customer. All customers are digitally processed, and this entire process, does not take much time. It takes, less than 2 hours. But in this process, a lot of data is collected. Lots and lots of data are collected. So the customer registers. We digitally capture his data. His identity is established through PAN card, Aadhaar card. There's a quick automated bureau check which happens on the fly. And after that, our rule engine takes over, segments that particular customer, bases the rules and the data that it got from the bureau, which is we use Sybil, Experian, and CRIF, all the 3 bureaus we use. And then the rule engine is able to kind of tell the affordability assessment, how much he should be given, what rate of interest and what amount. That thing happens. And a quick personal discussion happens if required, especially in a ticket size which is a little larger, more than 2 lakh rupees. And then a final decision comes. Once that decision comes from the credit person, it moves to physical or video verification, which is done by the operations people. And then there is a NAC setup which happens through which we collect the money on a monthly basis from his bank account. And the agreement is processed. That's again an e-signature, e-agreement, and the disbursal happens, right? So in this entire process, every step, there is lots of data getting collected. Verification is a lot of data getting collected. Geotagging the data, figuring out where the person is from, video of that person, all of that, right? NAC, again, we collect a lot of data. Okay? In the e-signature, we collect a lot of data with respect to timestamp, the IP stamp, where is he currently, what system is he using, all of that we get to know. So every step has a lot of data points collected. So that's what makes it richer. So at a micro level, these are some of the things that we look at. We look at FOIR, we look at AQB. So this is a little technical, but basically trying to kind of figure out the ability and the intention and the ability of the person to kind of pay back, right? What are the total overdues? How many loans he's running? How many loans are 90 plus delayed? What is the check bounces, qualification of the person? So this is not bureau. This is mostly asked by interaction with the customer, his ownership and all that if required. If it's the bigger tickets. CIBIL score, all of that is looked at. Okay, once that happens, then the system looks at how we can generate an offer for them, and that offer generation is basis some qualification and priority that we set. The priority number one is like, does he have a home loan? If he has a home loan and he qualifies the data that we are looking at, then he gets through. So that's the first criteria through which he gets a loan, right? Second is the loan or a business loan. Can you hear me, guys?
Because yes, loud and clear.
So does he have a personal loan or a business loan? If he has already running and performing, then again he gets second priority is that. Third priority is that if he has an auto loan, if he has a car loan or a bike loan or anything, and he's served for the last 24 months without any default, then he gets a loan. So you have to qualify these to kind of get a loan. And last, only 3% people get, other than all these criteria that I talked about. So he has to either have a credit card or a consumer loan or auto loan or any loan he would have serviced. So if you look at this data, it's kind of more than 80-85% people that we qualify before we can actually give out the loan to them, right? The rest, most of them get locked off. So this is the 85% people who get rejected. So if there is any customer new to credit gets rejected currently on the platform, borrower who has ever defaulted in the past, ever, even if 10 years back if he's defaulted, he goes out of the system. Borrowers who have current delinquency, right now they have kind of delayed. They have been very religious in terms of paying up on time, but now they're kind of defaulting. We don't give them. If they have bureau vintage less than a certain amount, 3 years in business and 2 years in salary, we don't give. For example, he has loans, but he's not been in the bureau for the last 2 years or 3 years, we don't give him loan, right? So we knock off. Anybody who's inquiring a lot on loans, we knock off those person. These are typically people who want money to be kind of given to somebody else, right? So we don't. So the whole purpose of giving the loan does not get served here. So that's the reason we don't give to these guys as well. And any delay repayment which is happening with anyone with more than in the last 12 months, more than 30 days, we do not give anybody. So these are very hard criteria. People get just knocked off in this, and then after 15% people go through this step, right? This step, micro level risk mitigation step, and after this happens. So 5% people get through on the platform. 95% people get knocked off. Maybe at best, 7 people get through. That's the best that can get through, and rest 93% people get knocked off on the platform. And we look at a lot of alternative data, which I talked about. We collect a lot of data on the journey of the customer. That also kind of helps. We use a lot of analytics after we've given out a loan. We kind of try and see how the performance of the person is, not just with us, but also how is he performing on the bureau. Has his score of his moved up or moved down? Has he taken a new loan? Does the credit card spends have gone up? Has he taken a new credit card? Has there been any delay in any of the other NBFCs or bank that he has taken a loan from? Has he taken another gold loan or something to kind of? So all of this will either put a stress on my system with respect to collections. I need to kind of inform my collection team to kind of go after that customer a little more with little more frequency. Any change in address or phone number, that also gets captured in the bureau. So there's a lot of data that we pick up after we have given. Also, the people that we have rejected, we kind of look at their data as well, right? So is he got a loan from anywhere else? Who's given him the loan? What is the kind of product that he has bought from the loan? So that becomes a lifetime value management for my customer. In case if I have to kind of give him loan in future, I can kind of go back and onboard him, right? So the idea is to kind of figure out through analytics who are the customers who can go bad and who are the customers who will pay on time, not basis just the score that he has, but also a lot of other movements which are there on the bureau, right? So we call this early warning system. We use this extensively to make sure our collections under control, right? Yeah. So I think from a risk side, these are some of the slides that I had.
Hmm.
So there is one risk that you should be careful about. A lot of P2P lending companies depend a lot on channel partners, right? So they don't onboard their own customers. That requires channel development. That requires a lot of capability building. So what they do is they tie up with some partner and they onboard customers for them, right? So if you are participating in those platforms, you have to kind of ensure that the partners are well spread across various industries and segments, right? Because any service or any business which has a chargeback history of customer going against or going to the court or going to the or credit card company and charging, asking for a chargeback, you should try and avoid. Otherwise, banks would have lent them. These organizations, large organizations, banks, anyways, reach out to them. But if they're not able to, then there is a problem maybe. Partners should have at least a minimum vintage of 3 years. We've seen some of them not performing. It should be profitable. They should be profitable as a business. Then the credit check should happen of the partner and also the promoters, right, who are running that organization, right? So a lot of we are trying to kind of do some bridge finance, asset-based lending. We're trying to kind of create that product, yet in the development stage right now. And one of the reason that partner-based lending, the collection becomes a little weaker. So it's important for you to have a very strong hold on the collections with valid references. If you're doing that, if you're getting that, then it's great, because individual loans that you do all of that. Plus, you should get a decent margin. Your margin should not be stressed because you need to kind of perform. Only then you will be able to kind of give returns to your lenders, right? So for us, MFIs have worked a lot. It's already a regulated business. Maybe that's the reason it has worked. But some of these consumption-based, which are not consumer durable, has not worked for us. Some of these, organizations which are, for example, the medical loans during COVID didn't work because a lot of those medical cases were not taken in because it was not emergency led, right? So COVID took over completely and only emergency cases were taken. So those kind of didn't do well. Some of the loans on the education side did well during COVID time. But in some partners, it completely went kaput because education centers were closed completely during COVID, right? So in demonetization, MFIs, didn't do well. But they came back after it was over. So what I'm saying is that you need to kind of be wary of when you're putting money entirely on a partner network. It's always better to kind of have an individual lenders, and that's so we have partner networks. We have decent partner network. We also have bunch of it. So 20%, 30% is the weightage of our partner network, and most of that is individual. This is the partner network that we have. Most of it is.
So Vinay, how gains are taxed currently, P2P lending?
So gains are taxed as per the income tax law. So you need to kind of you need to declare that income. So whatever is income slab that you are in, you'll be deducted. So we don't deduct anything at source because it's peer to peer, right? So it's the individual lending to individual, so that individual cannot tax the other individual. So that's the reason we just give out the entire money as it is. So it's up to individual to kind of declare that and
Okay. So Vinay, we have received couple of questions, so let us answer them first.
Sure.
So Swapnil wants to understand that how safe is P2P lending investment with Faircent, particularly with Faircent, and how is ultimately taking the risk? I mean, who is ultimately taking the risk? He's saying investor or Faircent. Of course, investors are taking.
So investors are taking risk in all asset classes. Investment. Investor takes the risk, and the organizations are trying to kind of manage and mitigate the risk. Okay. I just talked about how we kind of ensure that the risk is mitigated. So this is how the performance of the portfolio has been. We call this Faircent double, and I urge all investors and all my partners to kind of only participate on the double, because directly picking up borrowers on the platform is something which an NBFC or an institutional lender should do. Individuals should not do it. So this is how it has performed, and this is what the key facts are. So averaging around 1.38 lakhs investment. That's the investment average ticket size. That the number of APIs that we have on this product is around close to 40 plus. We do close to 1 crore plus monthly transactions on this app. 100% of withdrawal of the customers have been honored, and 100% of payout on maturity has been honored. Right. So nothing which is not. All of them have got. So we weighted average right now. The gross level is 26.95, and we do a daily transaction of 4.7 lakhs, which are loans broken up into multiple lenders and borrowers. And default to the lenders on this platform is 0% till now. Okay, so this is how it has moved. So we started before, just before COVID, and we were very conservative during that time. And we saw through 3 waves of COVID, still our portfolio kind of performed better. And that's because this is a lot of analytics has gone into this. We try to kind of calibrate. So if you see some of this, which is happening, is primarily because of the COVID. It moves up, it comes down, it settles. You introduce a new product, a short-term product, and you kind of take this up, and further again it comes back because of the COVID. So all of this that impacted you see is because of COVID, right? And then again it goes back. So January we had a COVID, it kind of went down. Then again we picked it up. So currently it's in 26.95, and this is the default. 4.35 is the default. So we are aggregating or averaging around net of 22.6, and this is the safety margin for my lenders. It's close to 12%. Now it's very, very difficult to move from 4.35 to 12%. That's 200 times, right, of prediction, right? You can't go 200 times wrong with your prediction, right? It's unlikely. Okay. So this safety net is what lenders enjoy. This is the money that I have. Average cost of lenders' money with me is 10.6. This is the maximum amount of money. The green line that is 12%, and the lowest one is 8.25. So average is around 10.6. So I have a pretty decent. Now there are 2 reasons for maintain this margin. One, safety margin is required for the short-term loan with liquidity. You can't get into a situation where we're lending long term and taking money short term, right? That's why ILFS went down, right? So you can't do that, right? So anyways, our loans ticket size are not very long. So as I said, it's 1.5 years, less than 1.5 years, and 1.25 years. So and the money that we pick up is, even if all of it moves to short term, then at least we should have some cushioning or some amount of money to kind of give it back if lenders come back to kind of ask money. So that's the reason. One reason. Second reason is that if the external environment goes bad, right, we should have some money parked with us to make sure that we are returning back lenders' money. Right? So that's the reason the safety margin is kept. This is how the 4.35 default performance has been. So microfinance has been the best channel for us, only 0.03% default. Short-term loans have been 0.99%. We have a few partnerships in this. Microfinance also is run through partnerships. Aggregators, these are individual borrowers that we onboard is 1.229. These are India Lends, Paisa Bazaar, Bank Bazaar. All these guys we integrate with to kind of onboard their customers. Then we have this DSA channel, which banks and NBFCs are using for many years. We use the same. This is one of the biggest channel that we have, and we intend to kind of make it bigger. We're investing a lot in this channel. This is a beautiful channel. And we get good individual customers from here. We like to kind of have those customers on. So it's 1.10, and organic is the people who come directly with us, right? So that is 1.2. So that's the breakup of the 4.35. That's how it looks. So yeah. So geographically, I talked about our spread has been pretty nice. So to mitigate the risk. So I think if you look at it broadly, great investment to have. Risk is mitigated. As I said, earlier platform was different and current platform is different. Earlier, we used to kind of have a model by which, yeah, this is the conventional model, uh, and this is the new model. Conventional model, lenders used to directly, lend to borrowers, right? Like that used to happen. Now, what is happening is that they used to lend. They still continue to lend to borrow to Faircent borrowers, but there is Faircent double in between. So all of it gets pooled with Faircent double, and the pool invests on behalf of all the lenders to these borrowers. So that's the way it works. So that's how we're able to completely knock off the risk.
Okay. So Vinay, Swapnil also wants to understand if he invest in 12% maybe product. So will he be getting 12% back? I mean 12% return or more or less than this? I mean,
No, you will get 12%. So if you invest 12 a lakh rupees, you get 1,12,000 at the end of the 12th month, right?
okay. Okay. And Paresh Bhai wants to understand that what are the post-sale services?
Post sale services for the lender, it's all on the app with respect to the reporting, with respect to the agreements, anything that he wants to see. We're very, very transparent as an organization. So you will see everything there on the platform. There is nothing which is all the data also that I've shown just now is also available there. So you can just uh, go through the app and you'll get all the. For our partners, we do have sales team. They support partners, train them, train their people. If there is a meeting required with the lenders, all of that support we extend.
Okay.
And we do, obviously some schemes and all that also, just like any other organization.
Okay. And what need to be done if monthly payout would be delayed?
So monthly payout does not get delayed. That's what I said. 100% we've honored, and the delay could happen because of the bank holidays. It could happen because of weekends and all that. Otherwise, the money, it's not that we are trying to distribute the money. It's system driven actually. So money will come and just goes, corrects and goes. As I said, this is managed by a trustee. The system takes over and pushes it out to the trustee, and trustee, अगर वहाँ छुट्टी है trustee का, तो delay हो जाता है एक आध दिन का. But otherwise, the money kind of comes, whenever it is due.
Okay. And Santosh wants to understand that what is the average ticket size? I mean, minimum ticket, I guess he's talking about minimum. What is the minimum amount that investors can invest?
So investors can invest a minimum of 50,000 rupees, unless you're coming through a program or a integrated app. For example, Cube or ICICI Securities, GM Financials, we have integrated through an app with them. So where we get large number of customers from them, right? There that we have dropped the ticket size to 25,000 rupees. Otherwise, majority of our partners who are onboarding customers directly through their dashboard, 50,000 rupees is the entry.
Kunal wants to understand that how do you deal with NPA? How do you deal with bad loans? How do you recover them?
So, so one is that our model is inclusive, right? It's not what do you call? We don't look for reasons to reject a person. We look for reasons to select a person. So that's fundamentally the difference, right? Because we only do personal loans. We don't do secured loans, right? So we do that, right? That's one. Post that, we look at the performance of the customer on a regular basis. Okay, that's what data does, right? And it informs the collection team that this is a customer which is under stress. This is a customer who's lost his job. This is the customer whose score has come down. This is the customer whose expenditures have gone up. Credit card expenditures gone up. He's taken another credit card. All of that information, whatever that information we get, we pass it on to the collection team, and we prioritize that in red, dark red, amber, and green. This is the priority, right? So green is the customers that you don't really have to touch because they will pay up. Dark reds are the ones you kind of go after. Now, this information is coming to you at least a couple of months or 3 months before the customer is going to default. Okay, that's why we call this early warning system. So because of the tech company, this is what. So we are able to arrest a lot. Our pickup on the first month is 98.5%, right? So 98.5% of the people pay up on 0 to 30 days, right? So there's a huge pickup which happens, a collection which happens in the first month itself, right? But there is now this data that I talked about, 4.3, is not 1 year average return. So returns that I've showed you is an average return that you get 12% or whatever. But the data that I showed of default is historic, from the time double started, right? so close to 2 years now. Now, if the customer does not pay in the first month, then it goes to the second bucket, right? Second bucket, there is a notice that we serve, which is, we call that a notice from the organization that we serve. And if he does not, then we send inform the agencies. We have tied up with agencies across the country. The agencies, people go and visit. We also have people across the country. There's a hub and spoke model. So that particular individual and that team is connected up with a lot of agencies within that city. So they are activated to kind of go and chase the customer. And we do all of that, for the first, 90 days, right? So even if the customer does not come after 90 days, then we issue a legal notice. Okay. Once the legal notice is served, the customer has to reply. If it does not, there's another notice served. And in most cases, customers respond in the first notice. There are some customers who do not respond. They kind of move to the second. 99% of the customers respond on the second notice, because the third notice, if it does not respond if the third notice comes, it's going to be a non-bailable arrest warrant. Okay, so the customers don't want to kind of get into that situation, so they're going to respond. Post that, we do collect a lot of money from these actions, from legal actions. Also, we do Lok Adalat in different cities. We do Lok Adalat. We also have an online resolution system, right? So customers can actually come online. The government has kind of created this during this pandemic only. People can come. There is a arbitrage which happens online. People can kind of represent and sort whatever is required, and a lot of people come there and pay. There is arbitrage clause also. If any of this does not work, we can move the arbitrage way. We can actually seize customers, because all our agreements have an arbitrage clause, right? We can seize customers' bank account. We can seize customers, property and all to recover the money. So all of that is possible. So whatever is required for legal, we do that. And we have building capabilities. Collection is one of the largest teams that we have, building capabilities. And one of the reasons that we are doing this is because we have to understand we are a platform. Okay, we don't make money from the interest, right? We make money on the spread. Okay, so we are an off-balance sheet lending company, just like an Uber, right? So we don't have any cars. Okay, but if both sides are performing well, we make money, right? So collection is a revenue center for me. Okay, so they have to work to kind of get revenue first. So if the default from 4.35 they move to 3.35, there is a 1% increase incremental income for me. Okay, so that's the reason collection team is very, very important for us. And also predictability that I give to my lenders with respect to the default and the safety margin that I'm creating is also a function of a good solid collection team that we have. Our collection team is the largest one, even bigger than the tech team.
Okay. So Vinay, gains are whether this is called as in bank interest or capital gain. What do we call this gain?
Interest income.
Interest income. Okay. Okay. And what is the minimum CIBIL or credit score that you look before extending the loan support?
CIBIL score is 720. Equivalent of CIBIL is CRIF, which is 675. But that's not the parameter by which you decide, right? CIBIL score is just an indication of that person's behavior of the past. What if that person has defaulted this month? How will you get to know that, right? So that's the reason you have to kind of go deeper in the CIBIL and figure out what if he has taken a credit card this month. Okay, what if he has lost his job this month, or maybe a couple of months back, because his PF data tells me that he has not deposited PF for the last couple of months, right? So we pick up a lot of data. We get a lot of information from a lot of areas. So there is a close relationship between the PF getting not deposited in the PF account and the credit card spends dropping down, drastically dropping down. 20,000 का spend होगा तो धक से 2,000 का हो जाएगा. Now it's a classic case of customer losing his job, right? So his score would be 780. Maybe we will not lend it, right? So it's important to kind of go deeper and figure out. It's not just the score that we look at.
Okay. So Vinay, there are many P2p players in the market currently. Then why should MFDs trust you for their clients' money?
So one is scale. I think scale is very important. More scale, more data, more predictability, better and correct predictability. The other is that the validations that we have across the industry and from people since the time we've started has been great. So Mohandas Pai is our advisor. So we have a bunch of great angel investors who advises us So for people from all walks of life, and are all either national or international players in their respective area they've worked in. Plus, the investors that we have who are now cap table, who have invested in Faircent as an organization, the P investors. We have GM Financial, ICICI Bank, who has invested, Muthoot. Then we have a bunch of Japanese guys. We have, a lot of. We have won a lot of awards nationally and internationally. Won a lot of awards for our technology, right? That's what is, all listed here. I'm not going to go into the details of it. And we've been operating for the last 9 years, as I said. And there's another thing, interesting thing which happened was that IIM Bangalore did a case study on figuring out these two-sided marketplace, which is the company which is developed a two-sided marketplace in the financial services business, and they zeroed on us. Okay, and they believe that in a classical sense, you're the ones who have a large number of customers on both sides in the lending space, right? Otherwise, if you look at banks, there's one customer bank lending to millions of people, right? So, or any other fintech which will have 5-10 NBFCs lending into millions of people, but we have millions of people lending into millions of people, right? So the model was different. So they did a case study on us, and this case study is in the Harvard Business Review. And this case study was, I think, done 4 years back. Even today, they discussed. This year also, Professor Srinivas called me for the discussion. It was a virtual online discussion, like we are doing it right now. And the progress how we're making with respect to the. Also, as I talked about the scale part of it, so this is the scale. Sorry. So if you look at it, we have disbursed close to 3,000 plus crores. Our repeat customer base disbursement is around 2,000 plus crores. So last year, in the financial year, we disbursed 1,250 crores. So we've grown 80%. We have borrowers registering on a platform close to now 4 million, close to 4 million borrowers we have. Loans that we've disbursed till now is around 1.3 million, and we have in the last financial year we had 10 lakh loan requests, close to 1 million loan requests we had just in last financial year. And there again we have grown year to year, we have grown 80%. On the lending side, people who have invested, we have 1.7 lakhs lenders on our platform. 23,000 customers lend on a regular basis every month. Historically, we've given an average of 14% to our lenders. This is before and after story, right? So if you look at data from the beginning, where there was no double in between, so lenders used to on an average make 14%. We had a 70% repeat lenders data. The loan size of the entire platform was around 37,000, and average tenure is around 15 months, which I talked about. The split between MSME and the salaried is 58-42. It's slightly skewed towards MSME. There are lots and lots of good MSME borrowers who do not get access to credit from banks and NBFCs, right? So it's very, very important to fund them, because they are the ones who will grow the country, right? They will employ people, they will generate employment, they will grow, they will feed into consumption, and that's what will grow the country, right? So it's very important to grow them. There are 30 million of them, right? So I'm very passionate about that, actually. Coverage, we have, as I said, we have today we have 970 lending partners like you who participate with us. On the borrowing side also, we have 250 plus borrowing partners. We've done partnership with a lot of organizations, a lot of people, a lot of large tech companies, all of that. Locations between lenders and borrowers together, we cut across more than 2,000 locations, which I talked about. The distribution part is well distributed. We have various loan products within the unsecured only. We have a lot of loan products, around 25 loan products we have. We have been, in operation last 9 years. We are a bit of a positive company. Last, 6 months, we've been running our business with a positive margin. Model is, all know that it's a marketplace model, and we have a 65% market share. Okay. Now this is scale, right? If you compare us with others, and this data is not coming just from one source. This data is coming from various sources. We interact with RBI databases because all of them have to report to RBI. We also get from the IDBI trustee the data, because many of them share IDBI. So what they say is that what you guys do in a day, Most of them do it in 1 month or 3 months. So that's the kind of scale that we're talking about. We do close to 120 crores a month. Our scale is different, and we predict it better. We grow the prediction even after so many outside calamities that we've seen. So yeah, so that's the reason you should invest with us.
So is there any maximum amount that lenders can invest?
Yeah, 50 lakh rupees. That's the limit.
Okay, 50 lakh is the limit.
Then you have to bring in another PAN card, right? So if you're interested to invest more, you can bring in your wife's, father's, sons, or whatever. One PAN card can invest not more than 50 lakh rupees, be it individual or company or anybody.
Okay. So one pertinent question: how can MFDs empanel with you, and is there any fee associated with it? What kind of commission structure they should expect from this type?
So if you're interested, my sales team will reach out to you for that. But we do have a very attractive commission structure, and that's primarily because we are seeding the category. I don't see this, I don't see this commission structure lasting for long, because we all know that in the mutual fund also there was a pretty interesting decent commission structure which SEBI came back, and because at the end of the day all of this the borrowers have to pay, right? And if I'm creating an impact for my borrowers, at the end of the day I have to make sure that they're getting loans cheaper. Otherwise the whole value proposition of this organization is defeated, right? So not that the regulation is right now spelling out that you can't charge so much, or you can't give out so much to your partners or to your borrowers. You can't charge. So it's a competition, fair competition. It's a marketplace. Whatever rate you want to charge, you can get the borrowers at. You can do it. But we fundamentally believe that this is not going to be for long. Maybe seeding the category will take 2, 3, whatever years, and post that we anyways have been here for long, right? It's not that. Regulation came around 2018, 2 years of COVID if you knock that off. So basically we ran only 2 years. So maybe we'll run for another 3 years, and after that we'll pull back these commission structures. But there is an attractive commission structure. There is an upfront commitment that we look at. It's not a major fee as a partner that if you join, either it is a 5,000 rupees you have to upfront us, or you give us a commitment of 5 lakh rupees of investment from your clients, or you get us 5 clients, right, of 50,000 rupees each, right? So that is 2.5 lakh rupees, right? So any one of it is okay with us, for us to kind of sign the agreement and start the initiative conversation with you.
Okay.
That's just to kind of because we'll invest a lot, right? So the moment you give us that indication, either you give a 5,000 rupee check, because that money is not important for me. The important thing is that commitment when it comes to me, because I will open up the dashboard for you. There is a tech dashboard which gets opened. That itself you will see it's quite rich. So you'll exactly get to know how your lenders are performing, how many money and how much money you've put in each lender, and how much of them have got back the money. All of that you'll get to see very transparently. You get to see all of that.
Okay. So I'll take 2 more questions because we already ran out of time.
Okay.
So Kunal wants to understand that. Can you highlight again what is the recovery process of bad loans?
So the recovery process is just like the way other banks or NBFCs do. We have calling as a process. We extensively call people after the early warning system. We kind of prioritize people and call them. Post that, there is a loan recall notice that we send from our side. That is on the on the 60-day bucket when the customer reaches 90-day bucket, 60 to 90-day bucket. When the customer reaches, there is legal agencies which is initiated. The agencies go and chase these customers, and 90 plus we go after the customer with legal cases, right? So we file a legal case, we issue non-billable arrest warrant if the customer does not show up. And parallelly, we also have, for old customers who have not paid, we have lok adalats, we have online resolution system, and we have arbitrage clause. So we work on all these three to ensure whatever closure is possible for us. As I said earlier also, collection is a revenue center for me. So I invest a lot. So maximum amount of people that I have today is in the collection side.
Okay. So one last question: what kind of support does Faircent offer their partners?
So I don't know what support you're looking at, but as an organization, We will extend the tech. You will get to see everything. Everything that we do is online. The agreements are online, so everything is online with you. And there will be a sales person who will support you for any request that you have. But as I said, all the requests that you have is already there on the app. You would really not want a lot of things, because I don't get any request from any of the partners saying that ye chahiye tha karke. So everything is available, right from you name it and it's there. It's there on the platform.
One last question: how much is the percentage of NPAs? It is less than 5%, right?
Yeah. So I showed you that. I know
Yes,
that you
yes, yes,
missed
of
that.
course. So, so there are a couple of more questions. What we will do is we will answer it offline post this session. I guess Pramit would, collate these questions and we'll send it to our readers later. So, all right. So we have come to an end to this interesting session. Thanks, Vinay, for such an insightful session. Thank you so much.
Thank you so much.
Thank you. Finally, I thank each one of you for being such a wonderful audience. Have a great day, guys.